Okay, 33A Part 2 asks us to do the adjusting entries following the rules of debit and credit, following good accounting. Now, adjusting entries, really, you're doing this. You've got two buckets. And you're taking stuff from one bucket and putting it to another. That's all you're doing. Now, this bucket could be prepaid insurance, prepaid rent, prepaid advertising, prepaid professional fees, and this bucket would be rent expense, advertising expense, insurance expense, etc. So our first one tells us that the name on this bucket is prepaid insurance, and we used up 2,400 of it. So from prepaid insurance over to insurance expense, debit insurance expense, credit prepaid insurance. Just taking it from this bucket and moving it to this bucket. The next is teaching supplies. And again, we're just taking it from one bucket called supplies on hand and taking it to supply expense. Now you have to do a little bit of math here because they tell you that we had $8,000 of supplies. At the end of the year, we had $2,800 left. How much must we have used? $5,200. So, from teaching supplies to supply expense. Debit supply expense, $5,200. Credit supplies. This bucket was supplies, this bucket was supply expense. The next, they tell us we're going to recognize some depreciation, and they tell us how much on the equipment is $13,200. Now remember, $13,200 is the depreciation expense that recognizes how much of it we used up that period, and accumulated depreciation is a completely made up account that we made up just so the rules hold. Accumulated depreciation simply says how much depreciation have we used up altogether so far. Nothing else. So, debit depreciation expense, that's going to go in the income statement. Credit that made up BS account, accumulated depreciation, same amount, $13,200. And they give us these amounts. I also want you to notice that all of the dates are the last day of the year. These are year-end adjusting entries. We're going to do the same exact thing with the professional library. Depreciation expense, accumulated depreciation. Now, unearned training fees. This is a little different because these are unearned fees. We got paid in advance and then earned the fees later. So we're told in advance that we got these fees. It's on our trial balance, $12,500. So over in this bucket, we had $12,500 of unearned fees. We've earned, what do they tell us, 2 months of them? 2 months worth. So that's $5,000. So we're taking it from the unearned fees bucket to the fees earned bucket. Debit unearned training fees, a liability. Unearned is a liability. credit fees earned. Let's take a look at the next one. This is the opposite. This, we performed the services and we're going to get paid later. So this is the exact opposite of unearned fees. Unearned fees, we get paid first, then we do it. Here we did the work, so we generated an accounts receivable and fees earned. This is a journal entry. The trick here is how much. It's all of December, all of November, half of October. I go backwards. I want to start where I'm at the year end and go to where I need to be. So I have 2.5 months, $3,000 a month, $7,500. Next is my salaries expense. This is common. This never happens at Temple because we get paid the last day of the year, or the last day of the month. So hence we also get paid the last day of the year. But many times companies will have their pay every 2 weeks. And the year ends on a Tuesday. So you'll have 2 days of salary from last year, and you'll have 3 days from this year. That's the case here. We have 2 days. We have 2 employees. They earn $100 a day. We're creating the payable. So we're debiting salaries expense, crediting salaries payable. Prepaid rent expense, we're back to our bucket. We're told that the rent for December is represented by the prepaid rent. So we're going to debit prepaid or rent expense as we take our prepaid rent and move it to rent expense. That's 3.3a. That's the journal entries. Now we need to take these journal entries and we need to take them and transfer them to the ledger accounts that we created before. So we started with the unadjusted entries, and now we have to go through and recognize the entries. So, teaching supplies expense, it's a debit to supply expense and a credit to supplies. So I'm going to credit the supplies $5,200, and I'm going to debit supply expense $5,200. Insurance expense, I skipped that one. Insurance expense $2,400. So I'm going to credit prepaid insurance. It's going down. Credit prepaid insurance. And I'm going to debit insurance expense $2,400. And I'm going to check it off to make sure I got it. Depreciation expense and accumulated depreciation for equipment. Depreciation expense, equipment, $13,200. Accumulated depreciation, equipment, gets credited $13,200. And while I'm here, I'm just going to update them as we go along. Okay. I think I got them all now. Okay, let's see what my next entry is. I got this one. Depreciation expense, professional library, $7,200. So, accumulated depreciation, professional library, $7,200. Depreciation expense, professional library, $7,200. And I'm just going down the list, line by line, item by item. Unearned training fees. They get debited $5,000, training fees earned get credited. So, I have training fees earned, $5,000. And I have unearned training fees debited because I've earned them. So I've debit the unearned, credit the earned. I've done that. Accounts receivable and fees earned. This is new revenue. Okay? So this is new revenue. So I'm looking for accounts receivable, $7,500. And I'm looking for fees earned, training fees earned. The training fees or tuition fees? Tuition fees, I'm sorry. Tuition fees earned, $7,500. It doesn't matter for the accounts receivable because all accounts receivable go together. They apparently keep training fees and tuition fees separate. That's not uncommon. I had a client that was a car dealer, and he kept the tuition from the paint shop, the tuition from the repair shop, and the tuition, the revenues from the paint shop, the revenues from the repair shop, and the revenue from sales separate. Not uncommon, not all that weird. Okay, salaries expense and salaries payable, $400. So salaries expense, debit $400. So I have $50,400. And salaries payable over here, $400. And my last one is rent expense and prepaid rent for $3,000. So I'm going to credit the prepaid rent. That brings it to $0. And I'm going to debit my rent expense. After all of those adjustments, I have created an adjusted trial balance. I just need to go take those numbers and put them in the adjusted trial balance.